Infosys has just announced India's biggest tech buyback ever, but there's a massive tax trap that could eat your profits. So let me tell you what happened. Infosys will buy back rupees 18,000 crores worth of shares at rupees 1800 per share. That's roughly 18% above the current market price. Sounds sweet, right? But here's the twist. Before October 2024, this buyback would have been a great deal because the company paid the entire tax, making it tax-free in the hands of shareholders. But what happens now is that the shareholder has to pay tax on the full buyback amount, that is rupees 1800, not just his profit. Yes, you heard that right. Let me break that down for you. Suppose you bought Infosys shares at rupees 1000 each. Now the buyback price is rupees 1800 per share. Under the old rule, the tax would be only on the rupees 800 gain, that is the profit element, and it would be payable by the company and it would be tax free in the hands of investors. But under the new rule, the entire 1800 rupees is taxed as dividend in the shareholders' hands. Sounds unfair, right? Let me show you the tax implication with an example. Let's take an extreme case. Suppose you are in the 30% tax slab. Now you get 1800 rupees per share. 10% was TDS deducted by the company. But the final tax liability, which will be decided by the slab, for now, let's take the worst case scenario. Suppose 30% tax slab is applicable on the entire 1800 rupees buyback price. That comes to rupees 540 per share. So after adjusting for taxes, rupees 1260 per share is the net received by the investor. So now guess what? The 18% premium has just become a 16% loss. And wait, there's one more twist. The 1000 rupees cost per share becomes the capital loss, which means you can't reduce this to the buyback income. You can only set off or carry it forward and adjust it only against the future capital gains. So what happens usually in a share sale is that you have to pay tax on the capital gain, which would be rupees 800 per share. But in case of buyback, you will have to pay tax on the entire 1800 rupees, which is sale price, or we can call it the buyback price. So to conclude, I'll tell you who should take this offer and who should skip it. If you are in the 5 to 15% tax bracket, it's a decent deal for you. But if you are in 20 to 30% tax bracket, you should think twice. You always have an option to sell it directly in the markets. Well, the record date is not yet announced, so you have time to plan. Save this video for later and also follow us for more such stories.